Good morning. It is May 8th, and you are watching the DecisionPoint Trading Room with Erin Swenlin and Carl Swenlin. We are here from DecisionPoint.com, and we're here to help you get ready for the week. We have some great charts to look at for the market. I'm going to cover the sectors, and we're going to look at a sector that looks good going into the week and possibly find an industry group or two. You need to use the Q&A box to talk to us, and you can use the chat box to talk to everybody else. I do have a moderator in the chat room, so if you want to go in and say hello, tell him where you're from, and get the conversation started, go right ahead. And with that, I'm going to pass it to you, Dad, and let's see what's going on.
Okay. I'm going to start out with the chart of the iShares China Large Cap ETF, using that to clarify a remark I made a couple of weeks ago regarding Taiwan and South Korean stocks. I said I wouldn't own them, not because I hate those countries, but I feel they're just such vulnerable spot right now with our weak leadership, and we have China. You know, this is probably the best opportunity they're going to have, until the next election to make a move. And if they move on Taiwan, there's a possibility that North Korea will move on South Korea. Anyhow, I just think whatever happens there is going to happen overnight, if anything does happen. And you won't have a chance to step aside if that were the case, most likely. So looking at China stocks, I want to look at the monthly here. You notice that they're down quite a bit, these Chinese large caps. Let's see, what is that? Down 60% at that low, and currently down 45%. So those stocks don't look like be a good place to be anyhow. Okay, moving to, here's the regional banking stocks ETF. I wanted to take a look at that, point out that we had this long flag formation, broke down from that, and it has snapped back, and you can see in the thumbnail here that it looks like it may have gone as far as it's going to go to the upside. I still believe, and many other people do, that this sector is not done having problems. So if you look at the PMO, this is something that is good to point out. You have the PMO and you have the price index. Hold on. And the PMO has turned up here, this spot. But you want the PMO to confirm what price is doing, and you want the price to confirm what the PMO is saying. So this is a positive move for the PMO, but price is still going down. And even though it continues to move up, price continues to go down. This is because PMO is below zero, and any movement back towards the zero line has to do with a reduction of weakness, not necessarily strength moving in. And that is certainly confirmed by price. So if price is suddenly making a nice move, little bounce here, technically, I think you don't need any other input, but this bounce is temporary, and I believe it's going to go lower. And PMO has not confirmed that. It's got a little jig there, but it's still falling, and technically it's a mess. Okay. We're talking about UNG. I haven't covered that, but for a while, and looks like it might be trying to bottom out here. Here's the problem. Again, you see these gaps. That is because, and let's get to the proper chart here. No, that's the wrong chart. Okay. I want to see dollar TGAS. This is the continuous contract for natural gas. You can see it's down at, well, got down to close to $2. This is a daily chart, and you got almost down to $2 earlier today. I'm sorry, this is a Friday. This is end of day. So it's at $2. Now let's go back to UNG. And let's look at the weekly of the UNG. And you see here, back in 2018, they did a reverse split, a 1-for-4 reverse split, which gave them more space between where the price was and zero. So reverse splits, watch out for them. To me, they're just making more room for the stock to go down, and as it turns out, that's what actually happened here. UNG is down right now at $6, and that is why we get that horrible these gaps in the up and down, because at $2, a 2-cent change is a 1% change for the continuous contract futures, and a 1%, and that translates to 1% on the UNG chart. So if they do another reverse split, it's only going to exacerbate this. That, of course, makes it more difficult to make short-term decisions on your trades. Okay, let's go to the market. Here's SPY, S&P 500, and it's in a short trading range here. It's been for, well, over a month in this trading range. And last week it broke up through this very short-term declining trend line. And as that was Friday, we had a really heavy up there, about 2%, as I recall. And now we're taking a break. Let me show you the climax chart. And there we go. The climax chart, on Friday, we had an upside initiation climax. Here was a downside initiation, and we had 2 down days off of that. Then on Friday, the upside initiation, and that is, we had all these spikes on these various indicators. Now, where did this come from? It hit me that the last few weeks, I watch Varney and Company about 30 minutes in the morning when I'm getting up. And I noticed that these people who are normally perpetual bulls were starting to be very nervous, and it was kind of like an extreme situation where these people who are normally bullish all the time were very reluctant to be involved with the market. And then on Friday, we had this blast up, and I know that was short covering. because, sentiment is really difficult to deal with. I don't do it very successfully, but this is one of the ways to look at it in short term. And the last upside was just people covering shorts. And I personally do not believe that it has anything to do with a brand new move to new highs. I think it's going to peter out, which is happening now today. Although when you have an initiation climax, you can expect some follow through, and that it's one of those things where it can go either way. But when you get that climax day, it's telling you, pay attention. The market's saying, look at me, and that we have, and we don't believe it's going to be a sustained up move. Let's look at our intermediate term indicators. Short and intermediate term. This is the short term Swenlin trading oscillator for breadth and volume. Those are the short term indicators, and we've got a higher low here, so could be moving up more out of that. However, the intermediate term breadth momentum and volume momentum are on down moves, and the volume is especially weak on this particular down move. One final chart for the S&P 500. Here's our bias assessment chart. The Silver Cross Index, which is a percentage of stocks with a 20 EMA above the 50 EMA. That's a short-term, intermediate-term buy signal. Here in the Golden Cross Index is the percentage of stocks with the 50 EMA above the 200 EMA, which is a long-term signal. They're both sitting around 50%. And the stocks above their 20, 50, and 200 are still all reading the same, pretty much the same. So we don't have any pressure to go either way. There's really not a pressure to go either way on this chart. Okay, looking at the 4, we have the dollar. It's no change right now. We should have a note, that being so, all things being equal, should be no change on gold, but gold is up 0.5%, so it's stronger than than it should be against the dollar. Let me go to a weekly chart. This is as of Friday. Here's the all-time high here, and we've gotten very close to that. Notice that in this case, in 2020, we had a very steep approach to that level, which ultimately failed. Another steep approach ultimately failed. Now we have a much more deliberate, we could have a pullback to this line, rising trend line, but we're doing some work, making progress, giving some back, making progress, probably going to give some back, but this time could be the third time is charmed because of this more deliberate approach. Crude oil, it's in a 1-year trading range here. This is the main trading range. It's gotten out of it somewhat here and here, but it's heading back to the top of the range. Let's just look at a weekly chart. Still pretty solid resistance at this level. So we might see it move to this level and stall some more. Bonds, again, they're in a trading range. And let's see, this narrow trading range here for the last couple of months, it's looking like it did not make to the top. So it's looking like possible breakdown from that range, and next support would be at this level. I got the long-term bond chart, 30-year bonds. This is virtually a 40-year rising trend in bonds. And everybody is adjusted to that. And many people have not broken that chain of thought, even though the bonds have, from this high, have dropped down over 30%. And that's put a lot of pressure. This is the source, by the way, of the problems that the banks are having. They're using long-term assets to back up short-term liabilities. Bad thing to do. Again, here's the yield, and it's broken the long-term trend. And, we believe that this is going to continue, that it's going to be another long-term trend in the other direction, painful, and ultimately people will adjust to that. Here's our yield to rate chart showing the 30-year to the 1 month trading ranges, and right now the 1 month Treasury is yielding over 1.5%. That's as of Friday, and notice we've got a pretty good support level here, and again, it's bounced off that level, and we think that once the flight to the bonds, finally abates, that yields is going to continue higher. As of today, the 10-year Treasury is rallying. It's up over 1% today. That's the yield, Treasury yield. So we would expect to see this chart with the yields moving higher. Bitcoin, broken down from this rising trend line. Right here is the support level. Let's look at the longer term chart. And you can see that this is a very steadfast level of resistance that it has turned back from. It's actually, we kind of got a rounded top here. Big tech stocks, Apple has this rising wedge, which it broke down briefly from, and now it's, after the earnings came out, it's trying to break out of that, the top of that wedge. We'll see how that all turns out. I'm still feeling like the wedge formation, the bearish aspects of that are going to overcome, but we shall see. Amazon, slight rising trend. Basically, we've got a triangle going there. Google, I noticed this morning, a nice rounded bottom. That's a very bullish, and we can look for Google to go higher. Meta, Facebook, doing well. Here's another rounded bottom, very big one. So Microsoft, undoubtedly, I shouldn't say without a doubt, but it looks very positive and apt to go higher. Netflix seems to have run its course on this rise off the bear market lows. It's up 136% at this point, pulling back. Triangle formation, we'll see what kind of decision that comes out of that. NVIDIA, another rounded bottom, really big. 2 years. And again, that's bullish for that stock. Excuse me. Tesla, not doing well. It's basically a series of lower highs and lower lows. Right now, there's a potential, this triangle, for it to recover and go higher. And did I miss anything? Oh, I haven't looked at the Q&A box.
It's actually really light this morning. We only have right now 3 symbol requests in there, and that's about it. You didn't cover gold miners. If you don't mind doing that, that'd be awesome.
Okay, looking really strong, as we would expect with gold doing so well. Stocks above the 20, 50, 200 in the 80s, 80%. So that's excellent. Golden Cross, 82%. Silver Cross, 93%. So with that, I will pass it over to you.
All right, sounds good. Yeah, so everybody, if you want to see a symbol or if you have a question, be sure and put that in the Q&A box, because that is where we do read it. So
here's a question that just came up that you might want to address. What indicators apply for 5-minute chart? PMO, RSI, fast STO, on balance volume? Thank you.
All right. We will get to a 5-minute chart, but just a quick answer to that is the 5-minute PMO is what I put on the chart, a 5-minute RSI, and a 5-minute on balance volume, OBV. So those are the 3 primaries that I use on a 5-minute chart. All right, let me grab the screen. And we're going to jump into the sectors now that we've gotten what's going on in the major markets in general. So as you can see, markets are traveling pretty much hand in hand. There's no, one of them isn't traveling better than the other, except I would say small caps are really starting to feel the pinch. They're down almost 0.75% today, while you're seeing most of the other indexes they're performing better, but not great at this point. In the positive would be the S&P 100 and the NYSE, as well as the Canadian TSX. So interesting little setup here, but in general, most of the indexes are doing the same, but we just would like to note that the small caps in particular, mid caps right behind them, are suffering today. Without, most everything's mostly unchanged, but not for them. If we look at this sector scoreboard over here, you can see that energy, well, it was leading. It just was moved out of first place by comm services. So we're seeing some nice move in energy, more than likely because of what's going on with oil. Financials are really, I'm seeing a snapback there, mainly because they did get pulled back so far because of the banking issues. But I would still, we were talking about areas of the market to avoid, and I would say financials is one of them. Your risk is a lot higher there because if we have more problems with the banking crisis, generally at least what we saw last time is it took down the entire sector, not just the banks. So you are setting yourself for higher risk if you are going to be in the financials area. Real estate, which honestly I looked at on Friday and looked like it was poised to do better than any of the sectors. Clearly not. They are in the bottom of the sector summary and down a little over 0.5% so far, but they're not alone. Most of the sectors are in negative territory as it is. Well, let's go ahead and dive into those sectors. I have a candle glance here. Let me update it to make sure it's exactly what I want. So I have a candle glance here so that we can see the PMO and the StockCharts technical rank on those charts. So what I usually do is when I pull this up, and I do this often, is I'll pull up this candle glance and I look very closely at what's going on with the PMO across the board. comm services is leading currently among all the sectors, but you can see the PMO is still in decline. There's still some problems there, but that StockCharts technical rank being as high as it is does tell us that that has been where a lot of the strength has laid. Technology, you can see, is also with a really high scooter rank here. And it looks like the PMO wants to turn up on that. We're going to look at these sector charts a little more closely, but I'm just making sure we're looking at the couple that we really want to concentrate on. And I would say comm services and technology look really interesting. And, you know, XLP, XLU, which were both leading into this market decline, are starting to suffer a little bit. You can see that we're getting a top beneath the signal line for the PMO on utilities, and certainly looking very toppy on the PMO for consumer staples. Those in the middle stocks would be discretionary, really flat PMO, kind of a mediocre StockCharts technical rank. You can see XLI, very similar. What we're finding with a lot of these sectors that they are in large trading ranges. You can see that on XLI, you can see that on materials, and that's caused our signal scoreboards to change rapidly over the past couple of weeks with all of the different crossovers on those EMAs. So, you know, while we may get these PMO buy signals, while we may get these silver crosses, as we call them, where the 20 goes above the 50-day EMA, we may start seeing those, but unfortunately, because these are in trading ranges, those are going to flip back and forth a little bit too fast at this point. Consumer discretionary is forming what looks like an ascending triangle. So it does look like it wants to break out here at the 200-day EMA. But I would say downside market pressure in general is going to probably take all of these sectors lower at this point. But let's concentrate. Let's see what's going on in XLC. So the charts I'm going to be showing you are all available to our website members and subscribers. Let me just show that to you very quickly. So if you join the site, you do have access to these chart lists. And the second list, oh, here goes my voice now. Excuse me. I should have muted. But you can get a hold of all of these with all of the annotations. Carl keeps these annotations up to date all the time, so you'll know exactly what's on his mind when he's looking at these charts. Couple of small things that I want to point out is these vertical lines that we use. You'll see them in a lot of our charts, including the sector charts I'm going to go through. A green vertical is a cardinal bottom, and a red vertical is a cardinal price top. So cardinal meaning their primary, their major bottoms and tops in the market. You can see that. And what we want to do is by marking those verticals, it really gives us a good idea of what's happening as far as positive and negative divergences with our indicators.
Yeah, they're not really major per se, but they're important, and they're usually marked after the fact because you have to wait to see where the change of direction comes.
Right. If you're going to see a major one or not.
And that
okay.
chart needs some attention.
Yeah. Okay, so let us get to the sectors here. Comm services is what I promised. So let's look at it. All right. So I was noting on consumer discretionary, I think we'll look at that chart as well, but an ascending triangle. We're not really seeing that here on comm services. We had a false breakout. It looks like it wants to head up and get back in there, but notice that the PMO is still in decline. We still have problems under the surface. Notice that participation is petering off here, and we don't have the kind of participation numbers under the surface that we'd like to see to sustain this move to the upside. So you have to be a little bit cautious here, even if we're starting to see some action in some of these more aggressive sectors. We need to be careful here and keep an eye on what the participation is. What is the trend of that participation? And right now, comm service is not looking too good.
The silver cross index is really got a terrible negative divergence.
Absolutely. You could see those tops beneath the signal line as well.
Right. I mean, go back to the February top and, price top, and you've got, good participation there, and it's just fading as you go to the right.
Yeah, I agree. So that's a big problem here for comm services. So it may be having a good day, but we need to be a bit careful with that sector. I'm looking at, excuse me, oh my gosh, my voice is just going here. Consumer discretionary, like I said, kind of in the short term, we're getting these flat tops, rising bottoms. But overall, we are in a sideways trading range, really. And we do have this symmetrical triangle that has formed. I've had a question from somebody that was asking, well, how is it that you can say that this symmetrical triangle is going to break this way and then that symmetrical triangle is going to break down? Why isn't it just one direction when you look at these chart patterns? Continuation patterns, which a symmetrical triangle is, can break in either direction, but you look for it to break in the direction of where price was traveling before. And we can't even see that on this chart. You have to go to more of a weekly chart to see where that symmetrical triangle is leading us. And you can see that the prior trend was down. So if the prior trend was down when that triangle was developed, your expectation should be a breakdown because it's a continuation pattern. So yes, your triangles can break to either direction. And I will say when I do my write-ups that this one will break higher and this one will break lower, but simply that is because of what those patterns tell us, which is some indecision, but ultimately you're going to continue in the direction you were in prior. All right, enough of that little discussion. So we can see consumer discretionary. It's a little better in that you can see that the participation isn't quite, moving down in the same way that comm services is. It's been mostly sideways. And we're at numbers that you could consider bullish because they are over 50%. The Silver Cross Index has topped, though, which is a problem. We don't have the negative crossover yet on it, that bear shift on it, but we are seeing a top, and that's not good news. But it certainly looks healthier than what we were looking at in comm services. So comm services may be leading today, but not looking quite as good as discretionary, although as we looked at that weekly chart, the expectation here is a breakdown from that triangle. So we need to be careful here. Staples, we're seeing has, like I said, we're getting a negative crossover here on the PMO and very toppy looking here right now. Typically you're going to see these defensive sectors lead when you're getting ready for a big decline. That's what they've done. And now they're starting to fade out. And if the aggressive sectors don't pick up the slack here, then that's going to definitely lead us into a market decline. Looks like comm services, like I said, trying to get there, but not showing it just yet. Energy, like I said, probably having a decent day because of crude oil. But you can see the chart is still very negative. Silver Cross Index did tip upward, but looking at the participation here, notice the Silver Cross is at 30%. All of these percentages of stocks above their 20, 50, and 200 are well below 30%. So more than likely what happened here to tip that Silver Cross upward was that some of these stocks where the 20 and 50 were really close together, we ended up with a pop on one or two of them, and that brought that Silver Cross Index up. But typically when you're seeing these low of a percentage, in the participation, above the 20, 50, and 200. Usually when you see that and it's lower than the Silver Cross, you're going to see the Silver Cross continue lower. So we still would expect that to happen. XLE, I think, is shaky at best here. Financials, like I said, probably a place to avoid, trying to make the return back up to overhead resistance. But you can see that participation really isn't expanding much here. And the PMO, although it has tipped upward, whipsawed back into a buy signal, we're still not looking at this sector as a place where you would want to park any money, just because of the risk is higher than really any of the other sectors. Healthcare forming another symmetrical triangle here. And if you go to the weekly chart, well, gosh, everything is moving mostly sideways, actually. You can say it is a symmetrical triangle. And in this case, the prior trend was up. So the expectation would be an upside breakout. But again, the problem you're going to have is if the market as a whole is starting to move lower, it's going to take everything with it. But maybe we'll see a little bit more strength out of the healthcare sector. We need to see better participation, though. Right now, it doesn't look very healthy at all. Oh, gosh, that was not a pun that was intended for sure. Industrials, XLI, as I was saying earlier, in a sideways trading range, really not helping us with our investments here. I would probably avoid most of the industrial stocks simply because it doesn't look like they're going to go anywhere. We do have better participation. We do have the Silver Cross Index angling upward, which is good, but price is just not responding to any of that. So I'm not looking for much out of industrials. Materials have really been suffering here. Rounded top, sideways trading range, PMO sell signal, the participation dwindling. Stochastics have turned up. I think what will help materials will be if gold really starts to kick into high gear, but gold's flattening out has not helped the materials sector. Real estate, like I said, this was the area I was looking to as something that we might see a breakout or might see some positive action. There were a couple of reasons. We have two PMO surges, as we call them, bottoms above the signal line on real estate, which looked interesting to me. We have the Silver Cross Index turning up, whipsawing back into a bull shift look, which is nice. And you can see that the participation has been pretty high here and not petering out, really staying mostly sideways, stochastics turning up. So while it's the weakest sector currently today, I still think it looks like it could break out here. It is a defensive area of the market. But again, overall, when you're going to see the market go down, as a whole, you're going to have trouble with just about anywhere you're going to be. You really have to keep an eye on your stocks when things start to look like this. The technology sector in a rising trend, but it is in a rising wedge as well, which does imply a downside breakdown. Participation kind of it's trying to improve. It's not done very much late, but you can see since that top back in late March, we have seen the participation moving lower as price has been moving sideways. So that's not a lot of strength under the surface for technology, but does look a little bit better as far as stochastics. Don't like that Silver Cross Index. And finally, utilities. We're seeing a PMO sell signal. As we are seeing on consumer staples, these are the leading sectors. They're starting to fall to the wayside. Utilities never really did that much during this period of time, but now they're starting to look a little bit weak. Certainly that Silver Cross Index with that downside crossover does look pretty negative at this point, but we still have some decent participation under the surface. It just hasn't really shown itself in price at this point. So I'm not looking for a whole lot out of utilities, but we could see those defensive sectors have a little dead cat bounce here right before a market decline, because that does typically happen. That is it for the sectors. I have already used up quite a bit of time, and so I would like to just move right into those symbol requests, because it looks like those really exploded here after your discussion, Dad. So interest.
RXRX.
RXRX. There we are. Nice look on this biotech. This is one of the areas where you can find some pockets of strength. If you look at the ETF XBI, and I'm just going to show that to you just for just a quick moment here. You can see that XBI, the biotechs, are really starting to make a nice move to the upside. PMO looks good. So I'm seeing this as a pocket of strength, as we like to call it. This is a nice move out of a low. Let's look at the weekly chart, though. I want to see where that is coming in. That low did come in on some pretty strong support. There's a touch there, a touch back there. These tops, these lows. So this was a good place for it to rebound. The weekly PMO is now on a crossover to the upside, and the scooter is in what we call the hot zone above 70. So the weekly chart looks good. The daily chart looks good for RXRX. Did I do the wrong one? I did, didn't I? Weekly chart for RXRX. Okay, looks a little different on the weekly chart. My bad. PMO is in decline. This is a pretty good area, though, for a rebound on this all-time low for RXRX. It looks poised to do well in the short term based on the daily chart, but just be really careful here. This is a very low price stock, and so you're going to see a lot of volatility. This is a 7% move to the upside. It looks pretty nice on here, but you're going to be up. If you want to get in a stock like this, you need to be ready for swings that are in the 7 to 10% range on a day-to-day basis. So have the antacid ready. But if we were to go in here, here is that 5-minute chart we were talking about earlier. Here is your 5-minute RSI, PMO, and on-balance volume. And what we're looking for in a 5-minute chart in order to get a good entry. Remember, these charts are for entry and exits only. I don't use a 5-minute chart. I don't use any of the minute charts to determine if I want the stock. I'm using them only for entries and exits. So 5-minute PMO positive crossover combined with a positive RSI is your entry point. So your entry would have come in here on one of these two candlesticks, somewhere in that range. A sell signal is when you see the 5-minute PMO turnover. You don't need to wait for the negative crossover. If you're here and you're trying to sell a stock, you just need a good excuse to sell it. And the best excuse is if that 5-minute PMO is starting to turn over. So right now, PMO is in decline, price is in decline. This is not a good entry point for RXRX. You're going to want to wait until that PMO can at least come down and make the turn.
Okay, PNTG.
Pennant Group, here's a healthcare provider. Again, healthcare looking mostly sideways. I do not like the look of this. I don't know if this was going to be a shorting opportunity, but honestly, that's what I'm looking at here. We're having, you can see the lowest price over here. The lowest close was right about this area. We've broken down below that. PMO is now below 0. Stochastic's tumbling lower. I would not be holding this. I would consider it as a possible short. I think that's about all I can say about this chart. And if you're at the 5-minute chart and you need to sell it, we're not getting much information out of that PMO or the RSI, except to say it's very negative and ugly. So I don't know that you're going to get a much better sell point here, but the PMO is trying to turn up. So you could maybe wait a little bit longer and see if you'll get a little more upside before you get rid of it. But I'm not a fan of this.
SCHW for medium-term hold.
All right, another one that is flirting with these lows. PMO is in decline. Stochastics are really the only thing here that's giving us some hope. But you can see if stochastics turn up just a little bit like this, they can turn down really easily. This is the kind of low I want to see on stochastics. I don't want these jagged moves like that. I want something that's a little bit more deliberate. And you can see that that's not what we're getting here. I don't like the chart. It looks like it's breaking down. Could be a place for a reversal, though. Let's look at the weekly chart. No, this is really, I mean, I guess you have some strong support here, but this is another chart that it's a financial chart. And granted, it's not necessarily.
Problem here, the banks.
Yes, exactly. And so you're actually opening yourself up for more risk. Schwab needs to do that much better than its group. And right now, Schwab is not performing well against the S&P, and it's not performing well, at least against the investment services industry group. So overall, I don't like this chart. Probably one that I wouldn't want to hold, particularly when you've got a PMO top beneath the zero line and a top that low beneath the zero line. I don't think there's much to like about this one, I'm afraid.
Cisco.
All right. Technology, telecom equipment. Bouncing off a really interesting area of support here, very, very strong. So this would be a great place for a reversal. RSI is not healthy yet. PMO trying to turn. Stochastics, like I said, another jagged move to the upside. And relative strength for this industry group is really bad. And you can see that, so consequently, it is performing pretty much in line with its industry group, maybe even a little better, but that's not helping it when you compare it to what it's doing against the S&P. So you're already talking about a pretty weak stock overall, within a little bit better in the group, but the group is suffering. Technology as a sector, not doing a whole lot as we looked earlier, but this is an interesting area to look for a bounce. So I'll give you that. And stochastics are moving up, but I'd say overall, this does look very weak. I think there are better choices out there. Let's look at that weekly chart to see how strong this support level actually is. It is a very strong support level, so I can see looking for the reversal here. But notice, certainly at least in the intermediate term, that PMO, weekly PMO negative crossover doesn't look good here. It really is suggesting that although this support level is very strong, that it has a high likelihood of breaking through it. So I'd be very careful with Cisco right now. 5-minute chart, if you do want to take the chance on this reversal, not a buy point just yet, but looking very interesting for a buy point at this support level. So if you have the time and you can watch this 5-minute chart, if that 5-minute PMO turns up, you maybe don't need to wait for that upside crossover to get in, because it is price has stretched out pretty low. And if you get any bullish sign here, if you're a more aggressive investor, you could go with the more aggressive entry here. Conservative, if you're a conservative trader, you probably should always wait for that positive crossover on a 5-minute chart. And if you are a beginner, something to think of too.
ABMD.
Airbnb, I gave them a little money this weekend. Travel and tourism has looked really good as of late as an industry group. And I believe recreational services was the industry group I gave DecisionPoint Diamond subscribers in our Diamond Mine trading room last Friday. If you like this trading room and you want another trading room, then you can subscribe to DecisionPoint Diamonds, and we have a subscriber-only trading room on Fridays. And that is a very intimate trading room. I know a lot of you are busy in the chat room here, but if you get in the chat room in my Diamond Mine, you'll have some really great conversations because it's between a group of friends, basically. So recreational services was an area that I was looking at. And I like the look of this stock very much. Airbnb looks great. You have the RSI is positive. You have a nice basing kind of pattern here with a rounded bottom, saucer shape. I really like that. You can see the PMO buy signal. It's now rising almost vertically. Stochastics not only rising now, but in a rising trend. And you can see as far as relative strength goes, the group is really starting to outperform. Like I said, at that area of the market, travel tourism, going into the summer, maybe that's why it's seeing a little bit of attention. But overall, the technicals look really good. I like Airbnb here. Let's look at the weekly. This bounce isn't coming off of any really major support level per se, but it is an earlier, it's not been around that long as far as the technicals go. But the PMO is rising, so we like to see that. RSI, the weekly RSI is positive. Scooter has just popped up into that hot zone above 70. So I'm liking the look of this. If you wanted to get in, what's our 5-minute chart look like? Well, I think you're going to be kind of stuck with getting in near the highs here. Yes, the PMO is kind of flattened out and moving lower, but that's not a consequence of losing momentum. It's a consequence of the fact that that rising trend is steadied and it's the same. And so the PMO is flattening out, kind of tending back towards zero. RSI is a little on the overbought side, but I don't think that with the PMO moving lower and not getting any price decline, I think you're kind of stuck with an entry here unless you want to wait it out and see what happens tomorrow.
Okay, 7 minutes, American Express.
Okay, again, financial space. So be really careful here. The group itself is performing mostly in line with the market. We don't like what's going on in the market right now. We are expecting a decline in the market. So you need a group, you need a stock that outperforms the market, not only is traveling in line with the market, but is outperforming the market. Here we have a stock that is underperforming its group. It's underperforming the S&P. The price chart, even without looking at the price chart, I already know due to relative strength that this isn't a place I'm going to want to be. And when we look at the rest of the chart, it's negative as well. RSI below 50, PMO declining. Yes, stochastics have turned up, but again, it's one of these sharp, jagged turns, and they don't always lead into something great. I really like to see those more rounded bottoms on those stochastics, and we're not seeing that, and including the fact that we have a declining trend in stochastics. So not a stock I like. I don't think we need to go much further there.
Good. VET. Excuse me. Yeah.
All right. This is in the energy space. And again, we have to pay attention to what's going on, especially with an exploration and production stock. We need to know what's going on with crude oil. Crude oil does look like it's on a really good place for a reversal. But overall, it's in a trading range, and that's going to really not do much for Vermilion Energy, VET. Relative strength, we were just talking about. Group is on the decline. This one's performing in line with the S&P. That's not really helpful. Stochastics are rising, which I like. PMO is rising. I get all of this. The RSI is rising, but it's still negative. Could be sort of a double bottomish look here. I still am not really excited about the energy space. I think you're probably okay on a hold until crude oil makes the move lower. But overall, I'm really lukewarm on that particular sector. And so unfortunately, I'm lukewarm on this just going in. And again, I was saying, relative strength dropping for the group. So I'm not really thrilled with this one.
WDC for a short.
Okay. All right. Well, on a short side, now we looked at a couple of charts that looked pretty weak. They would be more of an opportunity to short, but you can see that the group here is outperforming. It's performing in line with the group in the SPY. So yes, there's weakness here that could be exploited. But the way stochastics are acting with that rising trend and the PMO nearing a buy signal, I'm not so sure this is where I'd want to be just yet. I think we might see a little bit more upside on this one. And unfortunately, if we do see some more upside, that's going to really mature these indicators into looking even better. So I'm not so sure I would be on this one for a short, but here's a quick look at the weekly. It's still holding very important support here. It's not breaking down enough for my taste to go into a short.
Okay, EEM versus EFA.
Okay. So we're going to do a this or that. that means we will go down here to relative strength, because relative strength is going to tell me whether I want one stock over the other. So we can see this one's mostly flat, kind of moving a little bit higher relative strength wise. As far as the stock goes, double bottom, PMO buy signal on tap, stochastics moving higher, RSI positive. This looks good in the short term. Weekly chart. PMO is above its signal line. Looks like it's bottoming above the signal line right now. Yeah, pretty much. Two little PMO surges here. EMA is still posing a problem, though, for resistance. But overall, I'd say this looks pretty good. And this we're going to compare to EFA. Well, relative strength, slightly better, right? It's rising rather than flat. Flat. You can see stochastic still rising here too. You know, given the two, okay, this one's not on a PMO buy signal yet. These look pretty good, both of them, I have to say. I would lean toward this one simply because it is near its highs and it's breaking out above those highs. So it has a little bit more bullishness to the chart price-wise, but it's really hard to say because EEM has that double bottom, and I like the way that this one looks like it's ready to move up higher more quickly, but this one looks like it might have more staying power if you get that rally that looks like it might come to be. So you're asking me this or that. I have to say, if you make me pick one, I would probably go with EEM, simply because it has more going for it as far as these double bottom and the indicators. It's more mature. It's got a better chance of moving higher faster than this one. But this one, I think if you want to get into something you can hold a bit longer, that might be what you'd look at EFA for.
1 minute, ZIM.
ZIM looks good here. RSI negative, but rising. PMO trying to turn. Stochastics turning. Starting to finally get some good outperformance here. Not a lot, but a little. Industrial, marine transportation. Let's see. It looks pretty good here on this bounce, but it's got a lot of overhead resistance it's going to need to deal with here, particularly these tops. So while I see some upside here, I think it's going to stall because you're going to have too much overhead resistance to deal with. And again, if the market's going to make that turn like we think it will, this one might fall prey to that. So I guess at this point, I'd say it's a hold because it's holding that it's holding that support level. But I don't know if I'd want to make an entry here just because there is a lot of overhead resistance that has to be dealt with. I might want to wait for some confirmation, but unfortunately waiting right now is going to be a little rough because, like I said, I think the market's going to be heading lower. But this one I'd keep on a watch list. If I owned it, I'd hold it.
Ding, ding, ding.
And there you go. All right. Thank you, everybody, for attending our DecisionPoint trading room. It's always a pleasure to be here with you. We will be back again on Monday, same time, same StockCharts TV channel. And with that, we're going to wish you good luck and good trading. Come check us out at DecisionPoint.com. If you like our analysis in this room, then you're going to love our reports. Good luck, good trading, and we will see you next week.